Hi, everybody on the call. My name is Jimmy Clark. I'm with StartEngine. We're going to get started in about 60 seconds, so feel free to settle in while we have everybody else joining in. All right, why don't we get started? I know some people are still just joining. However, I'll review some of this information at the beginning again later on. So again, my name is Jimmy Clark. I'm a private equity associate at StartEngine. The topic for today is how to use private equity in your portfolio. This has traditionally been something that institutions have been allocating to aggressively. And now with companies like StartEngine, everyday investors or retail investors now have access to the next wave of opportunities. Before I begin, I do want to talk about the agenda, just to give you an idea of what the topic for today is going to focus on. First of all, I'm going to be talking about why StartEngine Private. Secondly, be talking about why private investing has become mainstream. And then finally, we're going to talk on how you can access pre-IPO companies today. And then we're going to have time at the end for questions. If you have any questions, just email me, jimmy.clark@startengine.com. I've got another screen here that I have my inbox on. So if you just type question in the subject line, I will read them at the end. So if you have questions while I'm going through anything, feel free to just type that up into an email to me at jimmy.clark@startengine.com. So let's begin with why StartEngine Private. StartEngine started actually in 2011 as an incubator to be the engine for tech startups. We were founded by Howard Marks. He is a Silicon Valley entrepreneur. He's done a lot of very interesting projects throughout his career. Notably, he created a computer mouse to be able to run the Apple II and ended up meeting Steve Jobs to show him the only time that Steve Jobs ever saw a computer mouse being able to run the Apple II. And Steve Jobs gave him some industry secrets that something called the Macintosh was coming out. Gave him a lot of critical information that he had the right idea, but so did all of the computer companies. So Howard learned to pivot his business. In fact, he coded typewriters to work as printers because back in those days, they used to have circuit boards. So he pivoted his business to printing. And as that industry became mainstream again, he continued to innovate into successful businesses that were bringing in significant cash flow until that all came to a head when he founded Activision Studios, where he was the co-founder and chairman of it up until their merger with Blizzard. And Activision Studios, if you're not familiar, they are the Call of Duty company that ended up being part of Microsoft today. And after that, he also was the founder and CEO of Acclaim Games, utilizing his deep industry experience in how to start tech companies and how to increase value based on what the companies already have. So when he started StartEngine in 2011, he had significant experience with startups, and he wanted to give that to other tech startups that were in the industry. And as laws changed in 2016, equity crowdfunding became legal, meaning that things like GoFundMe, where you would give money to companies like Peloton, and they became some of the publicly traded companies later on, you could actually get access to equity in those. So StartEngine was an early adapter to crowdfunding. And today we have over 1.5 billion assets invested through our platform by over 2.1 million investors. We have continuously focused on giving access to everyday investors to unique and interesting investment opportunities. You may see in our timeline that we also acquired Seed Invest a few years ago. They were a major competitor of ours, and our acquisition of them has kept us in the lead of one of the largest equity crowdfunding companies in existence today. And very notably, in November 2023, StartEngine Private launched, where we had so many investors getting access to early stage companies that these retail investors were asking for access to some of the largest companies in existence that hadn't gone public yet. So what is StartEngine Private? It's exposure to pre-IPO offerings. You may have heard of some names like Perplexity, Kraken, Stripe. Today, these are some of the biggest names in the tech industry. Perplexity is a competitor to Google. Kraken is a Coinbase competitor. And Stripe, I think, is one of the largest transactional companies in the country today. All these companies have been backed by top venture capitalist firms, and you would typically have to pay $500,000 or more per investment just to get access to these types of companies. At StartEngine, everyday investors can access these investment strategies as long as they're an accredited investor with manageable minimums of around $15,000. And you can see some of the names on here. Anthropic is a Google and OpenAI competitor. Grok, Cerebras, Databricks, SambaNova. These are NVIDIA competitors, data security competitors. There are a significant number of major companies available through pre-IPO offerings. So why is this? Why are there companies these large available? So I think we should just take a step back into why private investing has become mainstream. If you have taken a look at the holdings in the S&P 500 recently, you'll see that 38% of the S&P 500 is in just 8 companies. I mean, think about that. If you have $500,000 in the S&P 500 or indexes between all of your investment accounts, that means $180,000 is invested in just these 8 companies. We have seen concentration risk with all these companies because they're heavily investing in themselves because they want to avoid being disrupted. And you may know about the original company that was disrupted, that is IBM. In the early 1960s, IBM made what is today the biggest bet in corporate history on their System 360, the idea of computer networking between different devices. It accelerated IBM to being the largest company for the better part of 30 years. They were the NVIDIA of their day, and they refused to adapt to changing environment of the 80s and early 90s, and they were disrupted by their competition. Those very 8 companies sitting at the top of the S&P 500 today, many of them were the ones that were disrupting within different industry lines what IBM had been doing all along. So they're heavily investing to avoid being disrupted. You might have seen in my email that I had sent out about KKR indicating that 50% of their alternative portfolios for family offices are in these type of private or pre-IPO companies. And these are liquid investments, so the numbers do change a little bit when you think of liquidity. And that's why I like to think of Larry Fink with BlackRock. He's the CEO of BlackRock, and he focuses on alternative investments. And he's seen institutions clamoring for different types of alternative investments for years. And he's been a great person to comment on the trends of what individual investors are doing. And he says that he believes people are actually doing a 50-30-20 portfolio. If you're familiar with the traditional 60-40, this is a little unique in that 50% of people's average portfolios are in equities right now, 30% are in fixed income, and then 20% are in alternative assets. And of that 20%, about 10% are in pre-IPO or private equity investments. And then 10% are other alternatives like real estate or private credit. But this is why they are starting to do this allocation, because large companies are disrupting the industry. You used to see 25 years or more ago, small cap companies would outperform large cap companies, and that's not happening anymore. Have you asked yourself why? Why are small cap companies not outperforming? It's because institutions, private equity companies are clamoring for the highest revenue growth companies out there. So rather than listing as a smaller company, it's easier for these companies to stay private longer. They have institutional investors that would much rather invest in companies that have exceptional revenue growth year over year to an exponential potential that it's hard to value when it's publicly traded. And that means that the retail investor, the everyday investor does not have access to these, is missing out on what has traditionally been the largest growth accelerator in a portfolio. So how do you access these pre-IPO companies? Well, as you might have guessed, StartEngine gives you access to these pre-IPO companies. I mentioned earlier, our average investment minimum is around $15,000, but we typically see about $25,000 invested on average. We've done over 75 pre-IPO offerings. And you can see on the left side of the screen, here's an example of a current offering that we have. It's our AI Nexus Fund, where you get access to not just one, but a number of different startups or late stage companies that are pre-IPO, all in one fund. And these companies are out there trying to disrupt different areas of the industry. Perplexity is the largest holding. If you're not familiar with that, they are a competitor to Google and OpenAI. And companies like OpenAI and Perplexity have raised the question about, is Google search the future, or is there going to be some artificial intelligence version that replaces what we use Google search for today? There's companies like Cerebras and SambaNova. They're NVIDIA competitors focusing on lower cost, more energy efficient AI chips. There's robotics companies such as Agility Robotics and Gecko Robotics. There's Stoke Space, a space company challenging conventional thoughts on the space industry and potentially data centers in space. These are available for accredited investors. What that means is you have to have $1 million net worth verified on our platform, or verified by a CPA, an attorney, or a financial advisor. Or if you don't have that and you have income, if you're single, of $200,000 or $300,000 if you're married over the last 2 years, you can provide tax returns and meet those requirements. And then finally, if you just happen to be a financial advisor yourself because you've passed securities tests, they consider you to be an accredited investor as well. We also have investments available for qualified purchasers, which means that you're not just accredited, but you're qualified, meaning you have over $5 million in assets. We've seen some more interesting names, larger companies like Stripe is one that we've recently done for qualified purchasers. And then finally, we can take investments within IRA accounts. So many of these are exclusive to IRAs. This AI Nexus Fund has a sister fund with the same holdings that allows for IRA investments. So as you're making investments with retirement accounts, that may be an option. Here at StartEngine, we've seen IRA investing take off since we've launched it just a few months ago. You can see the orange bars are month over month of IRA funds coming into StartEngine. We may be familiar with Peter Thiel, one of the former co-founders of PayPal. He famously invested in PayPal when he started the company in a Roth IRA. So just a few $1,000 investment ended up being worth billions. And because it was in a Roth IRA, he never had to pay taxes on that money. It's been both controversial because he didn't have to pay taxes on that, but also a common point for financial advisors that are considering retirement planning. when you think of an IRA versus traditional IRA versus Roth IRA, that should be something you consider. But if you have either of these, you're able to invest through StartEngine with these. We've partnered with Equity Trust Company, but we can work with other custodians as well to custody the actual IRA investment. There's tax advantage diversification, just like Peter Thiel saw. And there's actually $18 trillion tied up in US IRAs. So what actual companies? So now I mentioned how you can access these. What actual companies besides funds do we have on our platform or have we seen? So if you look in the news, here are some recent news articles about private companies that at one point or another we've had access to, or we may have access to today. There's Anthropic, another OpenAI, Perplexity, Google competitor with a $70 billion revenue projection. Databricks is a $100 million partnership with OpenAI. Perplexity, they have a $200 million round and a $20 billion valuation. A Ripple, they recently raised money at a $40 billion valuation. And Stripe has estimated $106 billion valuation. Now, these are not insignificant. Now, I want you to put this in context with the S&P 500. The smallest companies on the S&P 500 have a market cap of around $22 billion. So if you have access to an S&P 500 ETF or an index right now, there are a number of companies that size or larger that you're not investing in because they're not publicly traded. They're seeing such significant revenue projections in year-over-year growth that they've held off on going public. And specifically now, where we've been in a period of 5 years from COVID-19 to interest rate increases impacting the IPO space, the next 3 to 4 years within the IPO space, we may see a number of these major companies finally going public. And we've seen companies like OpenAI, which is likely to be the largest IPO in world history, just recently valuing at $500 billion, which would put it in one of the largest companies in the United States. And the only way to access it, if you're not an institution or a family office, is through a company like StartEngine. And let me show you what the page looks like. When you go to StartEngine.com, you can see pre-IPO deals. This is what the page looks like. You can see our AI Nexus fund at the top highlighted that I mentioned some of the holdings to earlier. And then we have open offerings within individual companies. Like you see Neuro here is a autonomous driving car company. They focus on software and they're partnered with Uber to actually roll out fully self-driving cars within the next year in an undisclosed city, meaning that there's going to be Uber cars in a city driving around with no drivers at all. They've mostly passed these, and their business model is they're a software company. They're working with existing models. And if there's any questions, feel free to email those over to me now. I'll give you a few minutes to type up any questions and email them over to me. But again, my name is Jimmy Clark. I'm a private equity associate. Here's the email once again, jimmy.clark@startengine.com. And feel free to, if after the call you have additional questions or like to speak more or a little bit more in detail, feel free to give me a call or text me at 312-500-6438. Okay, I did have one question that came in regarding StartEngine Private. So here is the website, startengine.com/private, and you can see different investment options available today. And again, here's like Series Neuro, which I mentioned earlier before. You can see some of the companies that they've partnered with, such as Walmart, FedEx, and more. You can see different information, such as how much has been raised, what the funding goal is, what the minimum investment is. And for the terms are in here as well. So you can see the price per security and other pertinent details as you're making investment decisions. And again, I'm happy to have conversations with you as you review this information. That was the only question that we had. So I really thank you for your time, and I hope you have a great weekend. Thank you.